So what could all of this mean for the market this month and the rest of the year? Joining us now, Alicia Levine is the Chief Strategist at BNY Mellon. Alicia, good to see you. Thanks for joining us tonight.
Thanks for having me again, Bill.
I mean, we've got so many cross currents going on right now. These trade wars, you know, the negotiations with China coming up. We got more reports on the economy. Tomorrow's services, the jobs report on Friday. Do you expect more volatility? He asked naively.
So the U.S. has joined the rest of the world in the manufacturing slowdown, which, as you pointed out, is the reason for the sell-off over the last 2 days. And the big question out there is whether it has affected the service sector and the consumer, because the consumer is 70% of U.S. GDP, and services are likewise about 70% of the economy. So the reads that we get tomorrow, Thursday morning, and Friday morning are going to have an outsized importance compared to the past in how the market is going to interpret all the data. So a good read should help support markets, but if there's any weakness at all, it will continue the story of a U.S. slowdown and fears of a recession.
But to be clear, you do not foresee a recession. Is that still correct?
Our base case is that there is no recession in 2020, that the U.S. consumer does, in fact, continue to drive the U.S. economy and, in fact, drive the global economy. Having said that, we do see a slowdown, and we do see that the risks are rising from markets as well as the global economy.
Is this the reason the Fed cut rates the last couple of times? Is this the insurance policy that they were taking out, or do you foresee even more cuts down the road?
So the reason the Fed cut rates twice already this year is for several reasons. The first of which was that the U.S. monetary policy had much higher rates than the rest of the world. And that can be damaging to the U.S. economy if the U.S. Federal Reserve is much tighter than other central banks. We do think the Fed will cut another 25 basis points by the end of the year, which is actually what the market is pricing in. So that would be a benign event for the market. And we do think that it will help the housing market, for example.
So what do you do as an investor as we enter this month of October? Do you anticipate it will be, as it has been in the past, in some cases, an upside month or not?
So the data in the beginning of your segment was really interesting because they show, as you point out, that October is historically a higher month after a few days of sell-offs. This is a very interesting market because it's a market where macroeconomic events can really shape the direction of corporate earnings and markets. And the truth of the matter is that if there is a trade deal sometime in the next month or two, or signals thereof, then the market should move higher. But to the extent that it's just more talk and that there is not any kind of conclusion to the trade fight with China, we actually expect the market to move lower.
All right. We will see what happens this interesting month. Alicia Levine with BNY Mellon. Again, thanks for joining us tonight.
Thanks for having me again.